Picture this. You needed to buy shoes. Everyone needs shoes, right? So you went to the shop around the corner and you got what you thought was a decent pair. You're happy. Till you meet a friend who tells you that that same pair of shoes is available at a discount of 50% at the factory outlet barely a kilometer away. Man, that's gotta hurt, right? Well, in that scenario, at least you have a good pair of shoes. But what happens when you pay more tax than you should? This is MoneyWise on NDTV Profit, and I'm Alex Matthew. And today, we're talking about tax hacks that could save you lakhs. My guest today is Abhishek Mehta, the founder of Investa Capital. Abhishek, thanks so much for taking the time.
Thank you.
And you're going to give us a few secrets of the trade, tricks of the trade, so to speak. And we're going to run through sections and we're going to make it pretty simple for people to understand.
Right.
So what are we starting with?
So the first section I think every individual should know is about section 54 because like a parent said कि सर पे छत होनी चाहिए और आप छत कभी ना कभी you sell. So that is one section which every Indian should know is
to move to a better chhat, effectively.
Yes, or you buy a new better house, you keep buying a better house. So section 54 is very, very important and critical to know because this section tells you basically if you have a residential house and if you sell that residential house and buy a new one, the entire capital gain tax gets exempted. Now there is an upper limit of 10 crores, but mostly all Indians will fall below the 10 crores. So if your capital gains is less than 10 crores, you can go and claim a section 54. The only preemptive is that you should buy the new house before either 1 year before selling the new house or 2 years after you sell your old house. And if you're going into under construction building, so you have 3 years to pay that money from the money which you have got from selling the house. So that's the only catch which you have to ensure that you are within the limits to claim the exemption.
Isn't this applicable only to the first house that you buy, to one house? It can be any house that you buy.
It can be any houses. If you have 100 houses, you go and sell 100 houses, you buy new 100 houses. So the money keeps churning within the residential property only.
I always thought it was available only for the first, to the second house that you buy.
Yeah, so there's another section which is section 54F. It's on that you can buy maximum 2 houses.
Oh, but explain that.
So what does section 54F is? Basically, if you sell anything other than residential house. So if you sell your mutual funds, you sell your stocks, you sell unlisted shares and all those stuff, and you go and buy a residential house, then you don't have to pay the taxes. You can claim your capital gains exemption by filing under 54F.
But in the case of 54,
yes,
you can sell the house that you're residing in, or if you have an existing house and you are renting out a second house, you can sell one of those houses.
Yes, so basically you have to sell the residential house and then buy a new one. You keep buying and selling. If you sell one, you can buy one. It cannot happen that you sell one and buy 2.
Okay, you sell one and buy one.
Buy one. And that's how you can keep claiming section 54 over and above, like you can claim it 100 times. And only the capital gains has to be reinvested. So if I have bought a house for 8 crores, I sold it for 10 crore, I just need to reinvest the 2 crores to claim the exemption. Whereas in section 54F, I need to invest the entire proceeds.
Oh, that's an interesting catch. And are the limits different in 54F?
So 54 is 10 crores of the capital gains and 54F is 10 crores of the proceeds, sale proceeds. So that way probably your gain in 54F would be 2 crores, 3 crores, probably 5 crores, whatever it is. But these are very 2 key sections. Lot of people have seen they fail to claim section 54F because you keep saving your money to buy a house. Eventually everybody needs a house. So you keep saving into mutual funds, you save into stocks, and one day you sell those things. And government has given you that option that if you sell your shares, mutual funds, and if you buy a property, claim the exemption. You don't need to pay the taxes.
You said that there is a window, right? Is this applicable on 54F as well?
Yes, both
So 1 year before and 2 years after.
Yes.
In the case of an under construction property, you get a little more time.
3 years.
But there is a different account that you put the proceeds into, isn't
Yes,
there?
right. So before you file your returns, once you have sold the house, and before you file your return, which is usually 31st July, you have to save that money into a capital gains saving account. You have to
Okay.
go to a public sector bank and open a specific account which states a capital gains savings account, and you have to keep the money there. If you forget it, then you cannot claim Section 54F.
Okay.
Okay, if you go and file your return on 1st August and you say that, look, I have just deposited on 1st August, no, you cannot.
Technical question, can you claim it in anticipation? Like, for example, here's a situation, hypothetical situation, where in January of 2026, another month and a half for the end of the financial year, right? So, no, 2 months and 2.5 months effectively, right? So, if I anticipate that I will buy a house in May of next year, that is the financial year, in anticipation, can I claim, say, that I've sold mutual fund units, I've parked it in this special bank account?
Yes.
And in my returns for this year, can I say that I've set it aside with this purpose?
So once you have deposited the money, the bank will not release the money till the time you give them the certificate of payment to the builder.
Okay.
Okay. And if you want to take out the money, suppose you drop the plan, ki Abhishek, I'm not buying a property, then you need to go to your ITO. You have to go to your assessing officer, take a letter from him that I have paid all my due taxes on whatever amount I claimed as an exemption. Then they will give you a release letter to the bank that, okay, release the money. So
can you use those proceeds only to pay the taxes?
You can use any proceeds.
No, I'm saying whatever you had in that account.
Yes, you can use that.
You can use that.
Yes.
Okay, so we've talked about what to do when you have a house or when you need to book out your investments in order to buy a house. And this is all capital assets, right? It can be gold, silver, it can be everything, right?
Yes, anything.
Okay. Beyond this, what else is there?
So for businesses, people who are doing businesses, there is a very good section called as Section 44AD.
Okay.
Now what is this? This is called a presumptive taxation section. So if you have sales in a business up to 3 crores, you can file your income tax return without preparing a balance sheet and P&L. You have to show 6% as profit.
Okay.
So whatever digital sales has happened, wherever you have received money digitally, you can show it as 6% of the profit.
Is there some logic, the 6%?
So mostly, basically the IT department thought that if somebody is doing a business, they would at least earn 7-8% return on their business. Or else why would somebody do a business?
Right.
There might be certain businesses where the margin is very less, but those are more volume business.
Right.
If I'm doing a 2-3 crore kind of business, at least I'll earn 8%.
Sure.
So now what does this do is, if I'm doing a sales of 2 crores, 6% becomes 12 lakh rupees. I'll pay 0 tax in the new regime.
Okay.
I'm doing a business of 2 crore
and
I show it 6%.
Most people know this. If you have 12 lakh rupees of income in the new tax regime, you pay no tax.
Yes.
Right?
So 2 crores sales and I pay 0 tax under the new regime.
Okay. And this is, now what do you fall under? What type of taxpayer do you fall under? This is for business owners.
This is for individuals, HUFs and partnership firm. All three people can use this section 44AD. And most important, it comes you out of the biggest hurdle of preparing your balance sheet, P&L and accounting, all those, tensions and problems you come out of that.
It's called presumptive
taxation. For businesses, people who are dealing in goods basically, who are into trading, manufacturing of goods.
So in this case, you're paying GST first, right?
Yes, right. You will be paying GST over and above your sales.
Sure. Okay. So in an example, if you're talking about 2 lakh rupees,
yes,
then you're talking about say 18 or say 36 lakh rupees. Suppose you're.
So if my turnover is 2 crores, I'll probably end up.
Sorry, 2 crore rupees, then 36 lakh.
I'll be end up paying. If I don't have any GST purchase, I will end up paying 36 lakhs as GST to the department. But that the customer will give you.
Right.
And customer will also get the input tax credit on that sale, on that purchase basically. So this is a very good section which people should use and directly file their returns. Even if their profit is 20%, government will not ask.
And if your income is or your sale is over 2 crore, which effectively takes you beyond that 12 lakh number on that presumptive number, it's still beneficial because you're paying taxes based on the new tax regime.
Yes. So the upper limit is 3 crores.
Okay.
If you have more than 3 crores, you cannot go for this presumptive taxation.
Okay. There is probably more to that, right?
Yes.
It has to do with professionals, I would think.
So there are certain 7-8 professions which income tax has said said, like doctors, lawyers, CAs, engineers, who can file their income tax return under Section 44 ADA. Again, presumptive taxation, but there are 2 points here. The upper limit is 75 lakhs. So only people who are earning up to 75 lakhs can go under this section. Second, you have to show profits as 50% of the revenue.
Okay.
So if I'm earning 50 lakhs, I have to show profit as 25 lakhs.
Sure.
Which is generally the case in these professions, because they don't have much of expenses in the individual kind of. So if there is an individual doctor, an individual lawyer, he wouldn't have about 50% of the expenses.
Sure.
But he can go for this presumptive taxation and save a lot of taxes, and again, no hurdle to prepare their books of accounts.
So, but tell me something. It is something that we come across a lot. Look, as salaried employees, you always look at professionals and say, hey, you guys can claim quite a bit in the way of expenses, right? So, suppose you buy a car, you effectively need that car for your regular daily business.
Yes.
And it can be a car that is worth, say, about 20 lakh rupees, right? And you can then claim depreciation over a period of time as a cost.
Right.
And so it's a substantial cost that forms a part of your cost for the year, right? And you add things like that to your list, you can very easily hit more than 50%.
So again, anybody has to do a cost-benefit analysis.
Sure.
And the biggest cost-benefit analysis, do you want to go into a hurdle of preparing your books of accounts? Okay, because accountants have got expensive. It's not easy. You have to put down all your transactions. Because of UPI, I have seen number of transactions increasing from 500, a simple professional guy having 500 transactions, that has increased to 3,000. Because people are doing 20, 30, 40 rupees also UPI transactions.
Sure, and you have to explain all of that.
Explain all of that, prepare the books of accounts, file it. So better if there is you need to do your cost benefit analysis, but I would still prefer presumptive taxation because it gets me out of the hurdle of preparing books of accounts.
If somebody were to be claiming these expenses, then what kind of advice would you have for them? In that sometimes frivolous expenses can also be claimed, right?
Yes.
Abhishek?
Yes.
So therefore, what advice would you have?
So mostly, see, expenses which are related to business, only those can be claimed. So if you are going to your restaurant, hotel with your clients, you need to have all the bills in your hand.
Sure.
So that when the assessment comes, if there is any scrutiny, they require all the bills and the date of payment made on those bills. So I have seen a major gap in this thing because people
What
spend
are some
money.
of the weird things that people have claimed in your experience in these kind of expenses?
So mostly vacations, foreign vacations, people take, they claim it as business expense. A lot of time people claim their marriages also under business expense. They show it as exhibition, they show it as event, happen for the business. So all those expenses also people put it in the business to claim the GST also and to claim the outgoing as an expense. But income tax has become very vigilant now and they know where the marriages are happening. They know each and everything. So it's not that easy nowadays to claim all those things. There used to be an era, but with AI and everything, it's now difficult.
It's now difficult. Okay, so bear in mind that you should claim only what you're spending for your business. It's getting tougher, and the tax department is even digitally keeping your footprint in view, right?
In fact, there was a nudge campaign which income tax department, just a nudge, and people, 2,800 crore was recovered only on the nudge campaign.
What was this about?
Basically, income tax department just sent an SMS to everybody who had claimed a refund that your income tax return is on hold. If you want to revise it, you can go and revise it. So all those people who tried to play around, just on that nudge SMS, 2,800 crore was recovered by the department. So if department starts scrutiny of each and every return, the amount of money the department will recover is enormous.
So, and here it must be said, we're talking about legitimate ways in which you can save tax. So what's the next one on the list?
So a lot of people don't know that if I'm getting a rental income, okay, in the new regime also, I can claim the interest expense of the home loan which I have taken, or if I have taken any loan on that property. So whenever I buy a property, I make sure that I take a home loan.
Right.
Reason being, if I'm getting a rental income and if my interest is going out, the both get set off and I don't have to pay any tax.
But okay, so this is a conditional thing where in the old tax regime, under section 24,
Right.
you're allowed to have up to 2 lakh rupees
Of loss.
of interest expense.
No, you can claim the entire interest expense, but only if there is a loss in the business, in the rental income, you can claim up to minus 2 lakhs.
No, okay, no. So let me qualify.
Yes.
Most people will be aware of section 24, which is not related to loss of rental income, right? It is a pure provision for interest cost on a home loan, right? Which allows you to claim up to 2 lakh rupees.
Right.
Per year.
Yes.
Now, what you're saying is that even though deductions broadly are not available in the new tax regime,
yes,
there is a provision that allows you to set off if you've earned a rental income.
Yes.
If you've earned, or rather, if you've expended on interest to that same amount, you can set off your rental income.
Yes. So if I got a 12 lakh rupees rental income,
sure,
I will get firstly a minus 30% standard deduction.
Okay.
That will be first minus 30%, which will come to about 4 lakhs. Then whatever property tax I have paid for that property, that will also get minused. And if I have paid any interest on that property, I have taken a home loan and paid any interest, that amount will also get minused. And eventually, mostly I'll go to up to 0 rupees.
So this is assuming that you don't have any other income?
No, if I have any income, this is an expense.
How do you have standard
which you
deduction on rental income?
There is a 30% standard deduction given by the government because you do some repairs on your rental home. If you have you give some money to the broker, you pay the maintenance bill of that property. So you have certain expenses while maintaining that property.
And how do you claim all of this?
So you don't claim all of these. You can only claim a standard deduction of 30%.
Okay,
so
understood.
if I'm getting 100 rupees, I'll claim standard 30 rupees.
So no, say that again. So you have rental income. Suppose you have rental income of 12 lakh rupees, 1 lakh rupees per month.
Yes.
What are the deductions that you can claim from that? This is a new tax regime.
Old also, new also.
Okay.
In both you can claim.
Standard deduction 30%.
30% standard deduction. So my 4 lakhs will go roughly about. Then whatever property tax I have paid, that will also get minus. Then whatever interest I have paid, that will also get minus.
Interest on that, okay.
On that property.
Only on that property.
Only on that property. You cannot claim interest which you have paid on your self-occupied property for the rental income. So whenever anybody is investing with the purpose of earning rental income, they should or they can take a home loan.
Interesting.
Because that interest will get set off.
Okay.
Against that interest income.
That is certainly interesting. Let's talk about what else there is in the list.
So.
And there you go. It's fine. These are. It's important for you to look at the list because these are sections, right? So what's next?
So HUF is very important. It is the most underrated, I guess, tax structure which Indians have been using.
I must state that we've had a conversation, multiple conversations on this show and others on HUFs.
Yes. And
before we go further in this from a tax lens, it might be incredibly attractive.
Yes.
But to everybody tuning in, bear in mind that there are factors beyond taxes that you need to consider. And we've had a conversation on this, but do look up the complications that could emerge with inheritance and transference of property down the road. So there are advantages, but there are disadvantages. Weigh the pros and cons before you take a decision. We're talking about the advantages now.
Yes. So HUF basically is an Hindu undivided family.
Yes.
So any Hindu, Jain, Sikh, Buddhist can create an HUF.
Yeah.
What HUF will help you to do is, it will create a separate PAN card. A separate entity will be created.
Right.
The benefit of that will be, you will get a slab rates on all your income. So what I usually do is, all my investments are usually done, financial investments are done through an HUF.
Okay.
Because I can claim all the exemptions, basically all the slab rates
on a different PAN.
On the different PAN, because I come under surcharge.
Sure.
So I pay a lot of 10-20% surcharge on whatever income I generate, my wife generate.
Right.
So all my investments, financial investments, are done through the HUF.
Okay.
I can claim 1,25,000 rupees exemption, which the long-term capital gain tax gives under 112A. I can claim ATC. I can claim ATD.
So all the benefits that accrue to you as an individual accrue to the HUF as well. So it's basically splitting off your assets and using one more additional structure to, to transfer your assets.
Yes. So all your dividend income, your interest income, your debt mutual funds, your capital gains on the mutual funds, if you are under surcharge, can be parked with the HUF.
Yeah.
Coming on the disadvantage, that is why I'm again and again saying your financial assets should be parked, because those are very easy to liquidate at any point of time.
So not your physical assets.
Not your physical assets, because then those complications comes with, inheritance, transmission and all those things. But all your financial assets can easily be parked with an HUF, and you can claim the slab rates. If you have, suppose I made an FD of 25 lakhs or probably 30 lakhs. What is the interest income I'll earn? 2.5 lakh.
Yeah.
The entire interest income is tax free.
So fascinating. And interestingly, I was having a conversation with a gentleman the other day, and I was complaining about certain aspects of how much tax I pay. And he said, "You should do an HUF." I said, "Sir, my name is Alex."
Yes, so it's Hindu, Jain, Sikh, Buddhist. Only these four people can create an HUF, and they can do their financial investments in that account.
We both laughed for some time. But having said that, let's talk about the others in your list. Yeah.
Yes. So one thing is, if your children are now 18 plus, what earlier mutual fund unit gifting was very difficult. Now government has really simplified. You can gift your mutual funds to your children. So if you are planning to redeem probably today or in the near future, you can claim 1,25,000 as exemption. You can gift some of your mutual funds to your children's and redeem it there.
Right.
So what will happen? The capital gain will accrue to your children.
So if you intended to transfer it to them anyway,
yes,
you can actually gift it to them, in that if I am the transferer or the gifter,
yes,
then I don't pay capital gains.
No.
And if my child is receiving it,
yes,
when the child sells that,
right,
they will then have to pay capital gains.
Right. So relatives receiving any gift is completely tax free.
Is there a limit?
No, there's no limit. Even 1,000 crore can be gifted, and the relatives doesn't need to pay any tax on that. And whenever they will sell that, probably property, mutual fund, stocks, the tax will be on them.
Sure.
So they can claim that 1,25,000 exemption, and probably if you are under surcharge, again there will be no surcharge.
Okay.
And you can save your taxes.
How do you gift mutual fund units?
So basically you have to go to MF Central website, or you can go to AMCs also, and you can fill up a form for transferring of units under gift. And now it is very easy and very digitally possible through the MF Central website, which NSDL, CDSL and CAMS, we all have come together and made it.
So very interesting. All right. There's one other thing, and this is from the perspective of people leaving the country and becoming NRIs, right?
Yes.
We were discussing just before the start of this program.
Right.
There is an interesting available option for them to not pay tax on investments.
Right.
How does that work?
So before we talk about NRI, let's just, what is NRI? Okay, people usually get confused with citizenship and NRI. See, citizenship is different. You, me, we are Indian citizens.
Yes.
India doesn't allow dual citizenship.
Sure.
So if I become a citizen of America, I have to drop my India citizenship and take an OCI card. So concept of citizenship is different. Concept of NRI, the resident and non-resident, is different.
Yeah.
How does a person becomes an NRI, which is a non-resident? If he stays in India for less than 182 days, he becomes an NRI. So lot of rich people, they are sending their kids to Middle East. Lot of people who are earning money from their consulting income, they were earning money through their YouTube and all, are moving to Middle East or other countries where India has signed DTAA with
What
them.
is a DTAA?
DTAA is basically a double taxation avoidance agreement.
Sure. So
that the tax should not be paid in both the countries.
Sure, fair enough.
So what people are doing is they are moving to Dubai or other countries where Singapore, where DTAA is signed. Now what happens? DTAA says that the taxation will be taxed in the country in which you are residing.
Domicile, yeah.
So
Okay.
if I am staying in Dubai, I will pay Dubai taxation.
Which there is no tax in Dubai.
And there is no tax. So if I am a Dubai resident, I have invested into Indian mutual funds, there will be no tax on me.
Even if you sell those units?
Even if I sell those units.
In that particular year, if you have, if you're non-resident Indian,
yes,
and you're domiciled in the Gulf,
yes,
which is effectively the UAE,
yes,
you will not pay tax.
Right.
Very interesting.
And obviously, because you are an NRI, your entire global taxation is not taxed in India. So if I'm earning anything in Dubai, I have done some investments from Dubai. So all those are tax-free. Along with that, whatever mutual funds, stocks, money I'm earning, that is also tax-free.
Interesting.
So that is why a lot of people, rich people are, sending their one kid to UAE or other countries to get this tax
And
benefit.
even people, I think, who can work from anywhere are contemplating doing this. It's quite interesting.
Mostly YouTube creators, because they get money from US. They get from a US entity, so they can get the money anywhere.
Yeah.
So they move to Dubai and earn for free. You would have heard so many football players, because they go and play across various countries. They go to countries where the taxation is zero.
Sure. Yeah.
So that
Okay.
is
So we've talked about several options, and I think it's been an interesting conversation. Thank you so much, Abhishek, for giving me and my viewers a few ideas to think about.
Thank you. Thank you so much.
All right. Well, that brings us to the end of this edition of MoneyWise. Let us know what you think and stay tuned. This is NDTV Profit.